Good morning, everybody. Happy Wednesday. We'll get started in a few minutes. Thanks for being here. Actually, less than a few minutes, like 1 minute. Good morning, good morning. Alrighty. Let's see here. Okay. Perfect. Let's get started. Let's get started here. Making sure I've got everything in order. All right. Perfect. All right. Good morning, everybody. Again, happy Wednesday. Serge Berger here from thesteadytrader.com. This is our Set the Market morning show. We're going to spend the next 10 to 15 minutes going over some of the more important things that we're looking at. As always, if you are new here, please subscribe to the channel if you haven't already done so. And please give us a thumbs up like. And then we are going to get started here right now. As always, I have my notepad with me. And we're going to go through some things here. So first of all, I want to spend a little bit of time today revisiting something that we talked about earlier in the week, and that was the metals. As you guys know, we've been very bullish gold, which has worked out very well over the past 18, 20 months or so. We're starting to see more opportunity in the precious metals and across the board, as well as the base metals. I'm going to show you a chart here that my colleague JB made for us earlier this week. And we're going to go a bit deeper in there, and then we'll look at Tesla as well. I want to give you an update on what we're seeing there, and we'll go from there. So first of all, just maybe quickly, what's on my screen here? What's on my screen here is the market rover, and you can see the insurance stocks as a group are very bullish trend, and they're totally bucking the trend that we're seeing in the S&P 500, which again, as I keep saying, is essentially representing just the Max 7. And so there's a trade setting up here in IAK, which I'm actually sending out the alert to our Inner Circle members by email this morning. But I wanted to share with you what it looks like as well. We've got a new buying opportunity here from a trading perspective in insurance companies. Now, let's move on over to the big picture first. And again, just want to bring up this chart one more time that we brought up yesterday. And again, if you haven't looked at this yet, I would encourage you to take a note of this, take a picture of it if you need to. What we're looking at here is a dollar cycle chart, and essentially we think, and you can see this is a chart that I grabbed off of the internet, meaning off of Twitter. Essentially, it's possible that we're at a point where the dollar is at a pretty critical inflection point, meaning where it might just be topping or having topped for quite some time, and that has profound consequences for the equity market as well. And again, the reason why we think that's the case is because there's so much money that has moved into the U.S. markets, and so when now there's alternatives to invest in, it's no longer just Max 7. We now have opportunities all of a sudden, pretty much across the world and across asset classes. All of a sudden, that might mean some money is going to go out of dollars and into other places, and that is an important part. So keep this in mind. If you consider yourself to be a trader, if you consider yourself to be somewhat self-directed, and you don't care about these things, I always warn, it's very difficult to be able to make money unless one is willing to look at, to understand these bigger picture things as well. So hopefully this is something that resonates with you, and if you have questions, please let us know. That's why we do this morning show. So that's number one. And again, if you have questions, I'm happy to come back to it as well. Number two, let's talk about the chart that my colleague JB constructed the other day. I'm going to quickly bring it up for you guys so you can see it here. I believe it's right here. Here we go. So this chart shows us if you look at just the top part of the pane, this is a fantastic chart, by the way. So just look at it a bit more closely here. So what you're seeing here is we're basically comparing two things. We're comparing base metals, which is things like zinc and copper and aluminum, versus precious metals. And this is just two ETFs, DBB. DBB, if you look in the upper left-hand corner, you can see it. DBB is the ETF for base metals versus precious metals. Why is this important? It's important because we are starting to see some pretty meaningful moves. So if you look at the past few days, and again, if anyone would like to hear our bigger picture upside target in gold, I'm happy to reiterate that. If anyone cares, just quickly type in gold or something, and I'll do it again. I don't want to mention it more than people care to hear it. But gold continues to look good. Gold miners continue to look very good. Silver is starting to potentially catch up. So you look at SLV, which is this. But then you have these base metals, and one of the base metals to really look at would be copper. I keep bringing it up because it is a big deal. So we're starting to see essentially a lot of relative performance and absolute performance looking much better for things like copper, for things like copper miners as well. And so I think that's really, really important to keep in mind, because these are some of the opportunities that really will drive that whole energy demand that we see finally coming to fruition in the markets. So why has copper not done well? Well, it hasn't not done well. It's actually up. I mean, the CPER ETF, just to be very clear, year to date is up 17%. So it's done very well. It's beating the S&P 500 by like 22%. So it's clearly working, but it hasn't broken above its 2024 highs. I guess that's what I meant. So it's doing very well. I think it's only going to get better, but it hasn't broken above its 2024 highs. So that's one thing that I'm watching very closely, because I think that's the trigger we need for some of these other trades to get to start working in that space. So, which reminds me, I should quickly bring it up again, and I'm going to just bring it up here so I can show you the link. I had the pleasure of speaking with Larry McDonald on last week, and we actually put the conversation on our podcast on the website. So let me quickly give you this link. I'm going to put it into the chat box here, or whatever it's called. I'm going to put it right in here. Where are we here? We're live, so I think I can put it in here. There. Go watch this one here. This is again, when you go to our YouTube page, which of course you're on right now, otherwise you wouldn't be watching this. Go and watch this interview, because he brings up some great points about these sort of bigger picture ideas on where the demand is coming from, as far as again, demand for copper goes, and really an entirely different asset allocation model. So again, go check that out. If you haven't watched it yet, maybe watch it a few times. I would really encourage you to do that. Okay. Now, I want to take this back to Tesla, because we haven't talked about Tesla yet. And let's just get to it. So if you've been following what we've been saying about Tesla, I'm going to quickly show it to you here. This is the way we've seen Tesla over the past, basically since September of last year. The TST Trender Momentum Indicator, which is what we want to use for a stock like Tesla. Let me quickly bring this a bit further down. You can see we received that buy signal over there in October of last year, and the stock rallied 90%, then became a choppy area, and then we've had a short, and I think the stock is now down 30+% since that entry. The stock is getting to a point now where there's a potential for a bounce, and I'm talking about near term right now. I think long term there's good prospects, so this is a near term call. What's really interesting about Tesla right now is the options volatility. Okay, so when I look at a stock like Tesla right now, which in the bigger picture are now back to where I mentioned the other day. Remember, Tesla stock is now back to where it was in December of 2020. So this stock has done like literally nothing since December 2020. It's gone up and down, of course, but it hasn't like moved higher. So next time someone tells you about how amazing this company is and how amazing everything is around this company, remind them that the stock's done absolutely jack shit since then. Okay, so just keep that in mind. Now, I think there's a good story here, but just these are facts, right? To just pull up a chart. This thing doesn't pay a dividend. Okay, so you go and you look at where the stock was trading in 2020 in December, and you see where it is right now, and it's basically at the same exact level. Okay, so just keep that in mind. Just put it in perspective. I know people don't want to hear this because it's a very emotionally involved stock, but it's factual that this is what's going on. Now, again, the stock's been up and down since, but it hasn't made long-term investors any money, like not a penny. So that's number one. Now, what's really interesting about Tesla right now from a more near-term perspective, and this is for people who like to be near-term, so don't confuse this with long-term. If you look at Tesla and you look at its implied volatility, so this is the price of the options, how expensive are options? It's currently almost 100% options implied volatility. The last time we had this level of options premium was back in 2020. I think we had one in 2023. Let me go back a bit further and show you. Here we go. Yeah, we had one in 2023. And when that happened, it was a beautiful opportunity to sell options premium. So like for those people that follow us with options credit spreads, it would have been a great idea to maybe do a bull put credit spread. It's something we're considering. So if you're a credit spread authority member, just know that that's something we're looking at right now. And last time that happened, the stock then ended up rallying very sharply. That's not our forecast, and it doesn't have to happen. But at that point, the stock rallied, it literally doubled. It rallied 100%, right? So that's not our call. We think it might bounce a little bit here for now, and then we have to wait for the next earnings cycle, next earnings report. But it's interesting from a near-term trading perspective because we've now reached that 100% implied volatility, which last time we reached in 2022, actually in December 2022, and then the stock rallied sharply. So again, it doesn't mean the stock has to rally sharply. It just means that it might be getting close to being very oversold. So it's something we're watching very closely here to kick off this trading day here in Tesla. So that's that. And then the other thing I just want to quickly end on this, and if you guys have any questions on any of the stuff I'm talking about here, please let me know. I'm happy to stick around a couple of minutes. But I just want to quickly remind people, and this is something that I just still see not resonating with a lot of people because a lot of people are just thinking things are going to continue linearly. If you kind of live and die by the SPY, I call it SPY or die, that is a risky proposition to live by because when you get to the point of valuations cross juncture where we are in the global economy, interest rates, debt cycles, dollar. The S&P can easily go sideways for 5 to 10 years from here, or go up 5% a year. That's a very different market from what we have for the past 10 years. And usually people don't wake up to that until it's quite late into that cycle. So I just want to make sure people are aware of that. And if you have any questions, please do let us know. So with that, we'll see you guys over in the Trade Ops chat room. We've got a couple things we're going to watch here today. Maybe we'll see a trade set up early. We had a bit of a bounce here post CPI. Remember, the CPI reports are really not that important, at least unless they completely blow out, right, in either direction. I think right now everyone's kind of watching for tariffs and communications. One thing we might get today is news for Ukraine, Russia. Yesterday, we had an initial agreement struck that apparently Ukraine agreed to. Now the Russians have to agree to it. So I don't know when that headline hits, whether they agree or not, but that will likely be today's market mover. That would be my guess. So never a dull moment in this market, but that's what makes a trader's market. And with that, we'll see you guys back here tomorrow, Thursday, and of course over in the Trade Ops channels in about 10 minutes. Thanks for being here, and please subscribe to the channel. Very important so we can continue doing this show. Give us a thumbs up, and we'll see you tomorrow.